Is it a good time to invest in real estate? I get this question 10 times per week from my mentees. So I wanted to put together this market update to give you guys the information and let you know what smart money is doing right now.
Damn, son, where'd you find this?
Brian Grimes, your real estate mentor, back with another episode. We're going to talk about, is now a good time to invest in real estate heading into 2023? So I'm going to give you a market update, show you what smart money's doing, and educate you on the facts so that you can make an informed decision. If you're new to the channel, make sure you like, comment, subscribe, and leave a comment that says I subscribe. For everyone who leaves that comment, I'm going to send you free access to my free real estate training that'll show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on that free offer. The short answer to the question that everyone is asking is yes, it is a good time to invest in real estate right now in 2023, even with where rates are at today, because of some of the market fluctuations that are going to be happening and because of what smart money is doing. When in doubt, we can always just follow smart money and see what they're doing. Are they buying? Are they selling? How's the market responding to that action? So let's break this down, dive into a few articles, and just show you guys what's going on out here. So the first thing we have up for you guys is JP Morgan. JP Morgan has partnered with a company called Heaven Realty. And Heaven Realty and JP Morgan, they put together this fund to invest $1 billion into rental property. So their whole goal is to go out into communities that are out in the Midwest and buy single family rental properties. So this should be interesting to us because big money is still very much so interested in the single family rental space, which is that mom and pop space. This is where we invest as new developers, new investors. These are the properties that are easier for us to get our hands on because they're more affordable. Smart money is jumping in and buying right now. So this fund that JP Morgan put together, they plan to start investing heading into Q1 of this year. So they're just getting started right now. And this should be a wake-up call for you if you think now's a good time to be sitting on the sidelines. Smart money like JP Morgan, they're pouring in, $1 billion at least, or just through this fund. And there are other funds that they have that will be pouring in more billions. So know that JP Morgan and some of that type of smart money is doing this. BlackRock, which is the largest buy and hold residential real estate investment trust in the country, they just got an investment in BlackRock. You guys know I've done a video on BlackRock, and they've had a bit of bad news. A lot of people were pulling out of their fund at year end, but that can happen for a variety of reasons. One is tax loss harvesting. Sometimes people are just trying to reposition themselves in their portfolio to take advantage of drawdowns and drops in the market. But you see investments. This is University of California's investment fund. So big funds that have massive amounts of money, they just partnered up and invested $4 billion into Blackstone's REIT. This is pretty big in terms of an investment and a buy-in, especially into a fund that has had some drawdowns, people pulling out big money as of year end 2022. So another thing to consider is that the University of California's investment fund, they only invested $2 billion into Blackstone funds for the last decade. So they're pouring in $4 billion all at once right now because they know this is a good time to buy in. We're starting to see a bottoming in the market. And as rates go back down, it's going to be a really good buying opportunity. So they're seeing some things behind the table in these big meetings that we can just follow. We can follow the path of big money. And if you want to know what's inside of Blackstone's REIT, all you have to do is just do some basic research. You can go right onto breit.com / portfolio, and you can see exactly what's in their portfolio in terms of the percentage of their holdings, how much net asset value they have. You can see exactly where they're buying. So I get this question a lot from people. Well, how do I know where smart money and big money is buying? Well, they're telling you right here exactly where they're buying. And even if you go state by state, you can see the percentages of how much of their portfolio is held in each state. A lot in Florida, a bunch in Atlanta, a bunch in Texas. They're buying down south and out in the Midwest. So Very little in the Northeast outside of DC and a little bit of Chicago. And this should also be an eye opener for us Northeast investors. There's a lot of opportunity out here because smart money is not really there. They're not buying in bulk. They may find these areas a bit harder to navigate or to have a bit more competition, a bit more sophistication. So these are still good markets that aren't being artificially propped up by smart money that you can get in, grab a portfolio of 10, 20 properties and build serious wealth for you and your family. So just know that those opportunities still exist today. You guys can get started and stay active, stay vigilant, keep your eye on the ball here. More smart money buying into the industry. We have a Turkish fund here. This is a Turkish developer. They're tying up 2.2 billion in US housing. So this is just another example. I dropped an update not too long ago about China dropping $6 or $7 billion into US real estate last year. Heading into 2023, you have other developers as well from all over the country. This is just, a Turkish developer. There's billions and billions, maybe trillions of dollars that get purchased up in US real estate from outside of the country that we should be looking at and thinking about. And where are they buying? They're buying in Miami, they're buying in Austin, they're buying in New York and LA. They're buying in some of the hotter markets. But what this activity does is it drives up the price of sister cities. So sister cities are the cities that are next to some of these big markets like Miami, Austin, Texas, New York, or LA. So it starts to drive up the value of the sister cities. So when foreign investors buy up New York City, it increases the value of Philadelphia, increases the value of Connecticut and the surrounding cities. So if you want to know where you can find value, look to some of the sister cities and you'll be able to find some value. And now let's wrap this thing up with a bit of a market prediction. The National Association of Realtors, which this is a pretty big group here, they're projecting 3 possible scenarios. And let's just go over these scenarios and then we'll talk about kind of my 2 cents. Scenario 1, inflation continues to remain high, forcing the Fed to raise interest rates repeatedly. So as we're in 2023, rates just keep going up for the Fed funds rate. That means mortgage rates will keep climbing, hypothetically, possibly near 8.5%. So that's scenario 1. Fed just keeps bumping up rates and inflation is just not impacted by this, which I think is a little bit unlikely, right? We've already seen inflation tick down as a result of these rate increases. Scenario number 2, the consumer price index responds more to the Fed's rate hikes, and there's a gradual deceleration of inflation, causing mortgage rates to stabilize near 7.5% for 2023. It could happen, but the data so far is showing that there's been more of a strong response to what's been going on within the marketplace. Scenario 3 is the Fed raises rates repeatedly to curb inflation and the economy falls into a recession. This could cause rates, let me just highlight this for you guys. This could cause rates to likely drop to 5%, she says. And this to me is the most likely scenario because we are in a recession. We've been in a recession, in my opinion, since the middle of 2022, but we're definitely in a recession now. And when you fall into recessions, the Fed only has a few options. And a big option is we got to reduce rates. We have to cut back. In every US recession in the history of the United States, the way out has been to reduce rates. I don't think this recession is going to be any different. And as that happens, rates are likely to drop back into that 5% range, back into that sub 5 range, especially if you're doing some of those rate buy down strategies. And if you're doing that, your cash flow is going back through the roof. But as rates go down, prices go back up, right? Real estate prices will increase, which means this is the buying window. Now is the time where you can get in, buy some deals, and build some financial freedom for you and your family for the long term. So make sure you stay tapped into this game. Make sure you get your piece of the pie. Take it from smart money, follow what they're doing, and stay locked into this game. If you enjoyed this content, make sure you like, comment, and subscribe, and leave a comment that says I subscribe. For everyone who leaves that comment, I'm going to send you instant access to my free real estate training that'll show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on that free offer. Brian Grimes, Real Estate Mentor, signing off.